Welcome back. Well, we know business is competitive, but the battle for consumer dollars is heating up around the world in a big way. Alibaba and Amazon dominating online retailing, but JD.com, China's second largest online retailer, is ramping up expansion globally and growing 40% a year. Joining me right now is the international president, Winston Chang of JD.com. Good to see you, Winston.
Thank you.
Thank you so much for joining us. What growth? 40% a year you're growing.
Yes. One thing I have to correct is that we are the largest online retailer in China because of our unique business model.
Oh, tell me
we're
about
not the
that.
second largest retailer.
You're
We are the largest retailer.
I'm
yes.
sorry about that.
So we buy and hold inventory, and we buy the inventory, and we have a great management system, about 34 days in terms of the inventory turn. So we're using big data to really manage the inventory and working with brands and retailers to really effectively make their manufacturing process even more effective.
And this is one way to go at what has been the giant, it's Amazon, which is trying to get into every industry.
Yes. Well, in the retail industry, it's very, very broad. So we touch every single consumer products company out there, and we can really help all the brands in terms of from a marketing perspective, all the way to sharing our data with them to how to best target the customers.
Tell me what you're seeing in terms of commerce today. We've been hearing a lot of optimism in terms of the U.S. and Europe. Tell me about Asia, in particular China, in terms of the growth story.
Yeah, we're still seeing amazing growth inside China. We're a $200 billion roughly run rate GMV company, still growing at 40% as you iterated earlier. We still continue to see Chinese consumers' income continue to rise. As they rise, they want to buy more foreign products. And so we're engaging more with foreign brands to help them into China.
What's your take on what we saw out of the U.S. administration in terms of putting these tariffs on certain things like washing machines and solar panels? We could see it on steel and aluminum. That's going to make things more expensive, right?
Yeah. I think we generally import most of our businesses inside China, but global sales is also a business for us, but it's not as big in terms of our export business. But Chinese brands are getting stronger, and we want to help Chinese brands export into the international market as well.
And how do you do that? Let me ask you first about China. The last growth numbers I saw was 6.9% in terms of the GDP, but the regulatory environment is what people question. I mean, if the government puts in certain, regulations, that could change the game completely. So do you worry about that?
I think we still see very strong demand. The Chinese people work very, very hard. The Chinese economy continues to be very, very strong. I mean, it's a very large economy growing at 6.9%. So we still see tremendous opportunities. What
are people buying? What's sort of the big drivers of commerce?
We're seeing everything. We have a very broad category in terms of selection. Our user base is half-half in terms of male-female combination. We have a very strong effort to get into the apparel space. It's one space that we're slightly later in terms of development, but we're getting very stronger in. We made an investment into Farfetch last year, and then we also made an investment into VIP a few weeks ago. It was announced. So apparel is a very important industry for us.
Are you seeing wages go up? Are you seeing a tight labor situation?
We're not seeing tight labor, but it's competitive for certain labors, such as technology. I think as we push into technology and as China is pushing into AI and other areas, so technology talent is definitely in demand.
Winston, great to see you.
Thank you.
Winston Chang will be